Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, June 25th through Friday, June 29th, 2012, and is sponsored by Realtic. All right, guys, let's get right into the charts. And this past week was a home run week of profits. Unbelievable calls starting as much as a week plus ago, leading into this current week that we just concluded. If you go to last week's weekend video, I talked about how the markets would move higher into the midweek session. And this is calls. These type of calls are what we gave to our members at InTheMoneyStocks.com to the day. We said starting on Wednesday, you would begin to make your move lower, culminating Thursday, and that's the way this market would play out. We said ultimately early in the week last week, you'd rise up, and then you'd start selling on Wednesday. There was no better accuracy in the whole entire market than this call here. Members made more money on this call than some of them have made ever in their lives because the positioning was perfect. Whether you were trading the dollar or the euro, whether you were trading the market ETF or individual stocks like Exxon, Chevron, or any of these other big players out there like IBM or JP Morgan Chase, it was perfect in every way. I'm going to show you exactly what we're talking about here. First off, here was early in the week where we moved up. Going into the early portion of the week, I had my longs on Facebook and on JP Morgan. All right, we ultimately made money on them. In fact, I sold my last half of Facebook for a 19% profit on the long side on Friday as it came up into a key level that I've calculated out. Yes, folks, there aren't that many people out there that could say they made basically 20% on Facebook on the long side, are there? But if you know our PPT methodology, and again, we all know the PPT stands for Plunge Protection Team, but here at InTheMoneyStocks.com, it stands for Price, Pattern, and Time, which is our methodology that works. 80 to 90% success rate with calls that literally will play out to the day, meaning we will tell you when we get turn dates, when we get signals, and many of these will literally play out the exact day we say they're going to play out. If they don't, it's within a couple days usually. And these moves are huge. Thursday's move was a great example. We had positioned ourselves on the short side of the market using the SPY or buying the SDS, which is 2 times short the SPY, S&P 500. And that drop alone made many people a ton of money. As you can see on the chart before you, this is the SPY chart, which again mirrors the S&P 500. This is the 10-minute intraday chart, but you can see the rise into Wednesday. Then we got the whippiness on the Fed, and then Thursday the market was done. Friday we got a little bit of a bounce, but my analysis is showing that we will head a little bit lower, all right, into this coming week. And then you have the July 4th holiday week, which could be a flattish or maybe a small bounce week. All right, and that's what we're seeing right now. Right now, you're inching up, or you inched up on Friday, which, believe it or not, if you go to your 60-minute chart, can mean there's a bearish pattern forming. See this bearish pattern off this big decline? I'm looking at a major move. Like, for instance, on Monday, if we rise into the 20, 50, and possibly as high as this pink line, that's your level to short the market again if you want to. It's a great level right up there. Tons of resistance essentially between the 134 and 134.30 level. So 134.00 to 134.30. This area right up here, tons of resistance on the markets. Now, we may not even get up there, folks. I'm just going to make this clear. This market is on borrowed time. You're going to see more selling. That move on Thursday was a wide bar. Wide bar dictates further downside. It's just that simple. So, I mean, if you get up here, it's a gift. You may not even get there. You could just start going down as early as Monday and just keep selling. And ultimately, you'll come down to this area right here, double bottom. You can see on the 60-minute charts, the 200 MA. And ultimately, you'll break through there. Your next short-term levels of support on the market are as follows. You have a nice little level here at the 130-170 level, and then a double bottom around the 131 level right down in this range. All right, those are your levels short term. If you continue to break down, and I zoom out here as I just did, very clearly you can see your next pivot levels on the market, ultimately culminating at a double bottom at 127. All right. If we sold off all the way to 127 next week, then I would expect a bounce, probably double bottom bounce into the July 4th week. I don't know if we'll get that low next week, but ultimately this market will still head lower for the next few months with good bounces along the way. And the bottom line is here, folks. I mean, we have a 7-day free trial for anyone to take. I mean, as long as you're a new member here, a new person trying it out, you can take the 7-day free trial to the Research Center, which is geared towards swing traders and investors. And the Research Center gives you the proprietary guidance, the proprietary technical analysis, the cycle levels on the market, ultimately where to position yourselves. We also give out swing trade alerts when I buy stocks or when I short stocks or buy ETFs. I give out all those calls to the Research Center members under the Hot Shorts and Alerts, which is just one part of the Research Center. But you get everything included in that Research Center subscription. It's a great subscription. If you're a day trader, the 7-day free trial to the intraday stock chat is priceless. All right, the live intraday analysis, the live charts, the live calls, everything that's encompassing in that. The questions, we answer questions live. If you don't understand something, if you don't understand a level, if you don't know about a certain stock you want to look at, and we'll take a look at it, you just ask it to us. And that's a great thing for traders that are a little bit more active who want to be in the intraday stock chat. In any case, go to your daily chart, guys. And again, you can clearly see, you have your levels here on the market as we zoom in. We called for a bounce right off of here, and we captured it. We called for the sell to the day. We got it on Thursday. Now you got a little pause day, and I mentioned, believe it or not, I mentioned that you could have a small bounce to my members Thursday night into Friday, and I said, listen, guys, Friday could be a bounce. Now, what made me think there was a good chance of a bounce? Simply put, the sell candle was excessive, and it came right into the 20 MA on the daily chart here. In addition, if you go back to the 60-minute chart, at the end of Thursday, you were right into the 200. So you see how 2 time frames there were telling you a small bounce was possible? And these are the types of signals that if you're not paying attention to, you're honestly doing yourself a major disservice, and you're just giving money away. Institutions have computer programs, dark pools, you name it. They're out there to steal your money. I mean, they're literally out there to push you one way so you get out of a trade just as it's going to reverse and go your way. They're going to do that. They're going to push you to max pain. When using the charts, you can avoid all that nonsense. Believe it or not, I was in Facebook, and I bought Facebook with my members, and I bought JP Morgan with my members when the charts told me to, but also when the negativity was at its max, when CNBC and these clowns on that station were just like, analysts were coming on left and right saying Facebook's going to $10 a share. I love hearing that because it makes me start to get bullish. If I can find PPT methodology, price pattern time methodology, that points to a bounce and it coincides with excessive bearishness, I'm going to go long. And I will win that trade 9 out of 10 times. 9 out of 10 times, folks, easily. Same thing with JP Morgan. JP Morgan, everyone was so negative on their $2.2 billion loss, the stock getting crushed, comes into major support. I see the negativity on CNBC. I see it in the media. I see it in analysts. I start to go long. We make money there. All right, there are so many amazing ways to just rock this market and make money. And again, just over and over again, it's rinse and repeat. Capture a couple percent, 5%, 10%, 15%, 20%, sell in a couple weeks, within a week, within a couple days, and move into something else and do it again. 5, 10, 15, 20%, 5, 10, 15, 20%. That adds up. I can't even tell you. Long-term investors will be in a market, they'll be in a stock for years, and they'll make, maybe if they're lucky, 10%. Here at In the Money Stocks, you are literally looking to capture on this trade 3%, on that one 10%, on this one 5%. And then you just sell them in a week or less, and you move on to something else, and then get another 5, 10, 15, 20% there. And those type of gains are exponential, folks, exponential. And again, it's all about learning the PPT methodology. I can't stress that how members here have come, and we have Traders Life 24/7, which is a social network for members, and they share knowledge, they help each other, they learn the methodology, they preach the methodology, and they preach it and learn it because it works. It's that simple. These methods will change your life if you learn them. Institutions don't want you to know this stuff. Most of them don't even know this stuff. Our traders here at In the Money Stocks, 10 times, 20 times, 50 times, 100 times better than the average traders at JP Morgan, at Goldman Sachs. The only difference is a lot of these traders at Goldman Sachs have billions behind them, while an average trader here doesn't have that much, obviously. That's the only difference. But our traders, percentage-wise, will make way more money. All right? A lot of these, how many mutual funds do you say if they have a great year, they make 10%? All right, that would be a hard year at In the Money Stocks. A horrid year. In fact, I'd be ashamed. If at the end of the year a member was only up 10% for the year, I'd be ashamed. Because it doesn't happen. It does not. All right? Let's take a look at some other keys. What were some other great calls from last week? Let's go over them, and then we'll talk a little bit more. I think one of the best calls was the call of a second target reversal on the dollar. And I gave this line out perfectly as much as 2 to 3 weeks ago, guys. I said this right here is where the dollar's going. This is the UUP chart, so it kind of mirrors. It's the ETF that tracks the dollar. But I said this line right here is where it's going. You had a pivot low. You had the 50 moving average. This was a key retrace as well. Multiple factors telling us that's the point. We know the dollar is going to go higher, so it's just a matter of finding the right entry. And I said to my traders in the research center, I said, hey, listen, you want to buy the dollar here, or if you want to short the euro, you do it, and you rock it. And sure enough, Tuesday, Wednesday, dollar bottoms, reverses perfectly on the call. Another amazing call from this past week. You want to know another awesome call? Take a look at the SLV, guys. Silver. This is the silver ETF. And I told my members over the last month plus that we were making a bearish pattern here, which was going to eventually break down. I said, guys, silver's going lower. Silver's going lower. It's just about finding that trigger. How do you know the trigger? How do you know when to short silver and just be right and make tons of money in a short amount of time, literally a day or two? Very easily. This trend line connects all these lows. Look at all these lows connected right here, guys. I mean, just unbelievable. I said to them, with a bear flag and a trend line, when this breaks, you can short this on a closing basis. Right here, Wednesday, closes below that line. That's a technical breakdown. Look at the resulting drop. Beautifully right into double bottom. And this was my first target. So essentially you short SLV right there at around the 27.30 level, 27.40, 27.50 level. It drops by Friday down to a double bottom around the 26, 25.95 area. First target achieved. Slap a break-even stop and enjoy the ride. That's all you do. Discipline, understanding, and that's one of the beauties here in the Money Stocks. We teach you to be disciplined. Without discipline, you will never make it as a trader. You need discipline and the PPT methodology, and you'll make money from here to ever. All right. Taking a look at the USO, interesting charts on the USO here. We had a little bit of a reversal candle on Friday on the USO, which is the oil ETF. And notice how you got very, very close down here. Essentially, you did tag double bottom. So right around the 29 to 29.50 area right here. This is the level I was generally looking for with my members. I personally didn't pick this up because it didn't get low enough. I was looking for a little bit of a pierce, but nonetheless, we had so many winners last week, it doesn't really matter. But in any case, good little reversal candle. Now we'll keep an eye on oil to see if it can hold up or if it's going to sell back down. With a reversal candle, you could be putting in a short-term bottom here on the oil chart. All right, we recaptured $80 per barrel on Friday. Good reversal. I'm going to look for confirmation on Monday to see where that thing could be heading. All right, let's take a look at a couple stocks. You have Apple. Now, interestingly enough, Apple is micro bullish, believe it or not. But the macro, and this is very important, folks, in micro macro, you must understand when you're a trader. Unbelievably important. Micro means small, right? Micro this, micro that. Macro is big. Macro is like the entire picture. When you look at patterns, short term the micro will be more powerful, but long term, if you're looking over the next multiple weeks or months, the macro will play out. And what I'm seeing here, folks, is you have a micro bullish pattern right here, which is above the moving averages, but the macro is a bearish pattern here. See this macro down move and bear flag right here? Very reminiscent, believe it or not, this pattern is very reminiscent of the SLV chart, where we just had that sideways bearish consolidation right here. And again, I'll show you that SLV chart again. All right, see the SLV, same thing. Connect all the lows right there off of this down move. That's the down move. That's the bearish pattern of consolidation. So essentially what you want to do here on the Apple is just follow this trend line here, which we're kind of right on, and then you need to also see a break of the two moving averages. I wouldn't, just because you close below here, I wouldn't be ready to short it because you have the moving averages there, but any close on Apple below these moving averages right down here, this thing's done. This thing will drop. It'll drop down to this area right down here. And then ultimately, I think it's going to the 200 MA. Now, could it still pop up over the next Monday, Tuesday, Wednesday? Yeah, it definitely has a chance to do that. And the reason why you know it has a chance to still micro go up is because you have the micro bullish pattern here, and you didn't close below the two moving averages. You're still above them. So that gives you a short, very, very micro short-term positive, with an overall macro long-term bearish negative. And again, all you're looking for at this point is a close below these moving averages, guys. Close below the moving averages on a daily chart like down here. Done. Bam. So this is how you read charts. You can read charts. It's like having the holy grail, folks. It's no coincidence that, my partner Nick and I, we were able to nail the down move off the cycle top, and we called a cycle top, and we called a rounded top. It was a beautiful rounded top. It actually turned out to be a head and shoulders pattern. Market broke down. We profited on our shorts. We came down just at the right time, and we bought our longs, and the market bounced. And now we went short again, and the market fell. At some point you have to face the facts. The methodology is a beautiful thing. I love it, honestly. I sit every night analyzing charts left and right, trying to find the key time counts, trying to find the pattern, price, and timing factors that will enable me to make a call on a stock, on a market, on an ETF, on a commodity or currency that will literally make me the next $10, $20, $50,000 in my pocket and put tons of money in my members' pockets. All right, when I take trades, I put them out to the members in the hot charts and alerts as swing trades. When I take trades, we talk about them in the chat room. Ultimately, it's just a matter of reading the chart correctly, and it will tell you 80-90% success rate which way that's going. That's all you do. And it works. So I encourage you all to come to inthemoneystocks.com, take the 7-day free trial. Open your eyes, start putting money in your accounts on a weekly basis, monthly basis. Learn a methodology that is recession-proof. It doesn't matter what the institutions are doing. It doesn't matter what Bernanke or the media is reporting. You make money in any type of market. Up, down, doesn't matter. Even if you have a 401k or IRA where you can't really short the market, you can still play the long reverse inverse ETFs, and you can also just pull into cash. And that's one of the things I stressed to our 401k IRA guys is that, listen, when we have a cycle top, take your money out and put it in cash. Then let the market collapse, and when we say, okay, this is a good level to go long, you put it back in. And ultimately, the amount of money you can make doing that, even in a bad market, is unbelievable because you're still catching 5-10% bounces along the way, and you're making, probably even on in a down market with that many bounces along the way over the course of a year, you could probably make 25%. Think about that, 25% in your retirement. Not too shabby, folks. In any case, my only recommendation right now, folks, one word to leave with: 7-day free trial. Just take that. You'll find out. Trust me. You'll come to the Money Stocks. You'll find out everything about it, and it's an amazing thing. Have a great evening, guys. Have a great weekend. I look forward to seeing you all with us here at InTheMoneyStocks.com. Take care.